Hey Puppy Trades! I wanted to do a video analysis update on Cathie Wood's corner of the market. A lot of you guys are too young to remember this, but way back in the last quarter of 2020, if you went on FinTwit every day, you would see a picture of exactly what Cathie Wood had invested in her ARK Innovation Fund. And the reason for that is that a lot of her high growth stocks were some of the best performing stocks of 2020 besides lumber. Shout out to lumber bulls. We'll get to the inflation vehicles this weekend. But in this video, I'm looking for future Nvidias, future Square Cashes, future PayPals, future Snapchats, future Twitters, future Rokus, future Netflixes, future Ethereums, and future Bitcoins. And I think I found some. But what must be understood about every single one of those stocks I just mentioned is what every long-term investor who got in early will tell you. They have held through multiple 50% corrections to get to where they are now, which is a plus 1,000% return without options expiration risk. So these stocks are not for the faint of heart. These stocks are also not for traders who hypothetically will fall in love with their fundamental picture because they're sexy and neglect the boring side of this market, like the industrials, the airlines, the oil stocks, the pharmaceuticals, the banks, the silver miners, and the consumer stocks. Because there's going to be plenty of weeks like this week and plenty of quarters like last quarter where those sectors are the outperformers. But there's also going to be plenty of weeks, months, and quarters, which I believe are coming up very soon, where we see some fireworks from these growth stocks. So that's my disclaimer on diversification and the high beta, high movement of these stocks. So without further ado, here's Cathie, and here's Tesla. Tesla completes an ABC correction from this high, then goes on a wave 1 impulse and puts in a wave 2 low without breaking this low of 539. So that's the level bulls need to hold. Now, a lot of wave theorists, they'll use these downtrend lines to contain the corrective structures. Once the downtrend is broken, then that's their evidence the corrective wave is done. And I do believe right now this wave 2 has ended and we are going on a wave 3 impulse higher that will take Tesla to 932 during the same time frame that Apple and Microsoft and Amazon are going on their legs higher. So I think, in the middle of this summer, we're going to see Tesla in the 930 range, and that wouldn't be the top. We'd have a shallow wave 4 before a 5th wave higher. So I'm looking for Tesla to break above this high pretty early in the summer, form a large cup and handle, confirm this was all basing, and get ready for a run into the mid thousands. So let's look at Tesla on the longer term time frame. All right, this is pretty clearly a wave 1 and a wave 2 that Tesla puts in the before the 2020 sell-off. This is a wave 1, and then in the 2020 sell-off, that's a wave 2. So now we have to ask, what is this high? If this is a wave 3 high and this is a wave 4 low, then we're looking for Tesla to replicate that run. Okay, so we need to find the length of wave 5. In Elliott wave theory, wave 5 will either be the length of wave 1 or the length of wave 3. If wave 5 is the length of wave 1, then Tesla wouldn't make a new high, right? So wave 5 can't end at 700. I don't believe that Tesla's wave 5 will be the length of wave 1. I believe it will be the length of wave 3. And Tesla will replicate this entire rally placed at the wave 4 low. So we always need 539 to 546 to hold as the low. And if that does, the length of wave 3 placed at the wave 4 low will take Tesla on a run into about the 1300s. All right, the 1360 range is where I'm expecting Tesla to go next. So this run is from 316 to about 125. That's about 10 months. But it's important to realize that I don't think that's a wave 3 and I don't think that's a wave 4. I think that what this actually is that this is another wave 1 and this is another wave 2. So if bulls keep Tesla above 539, then I still expect the length of wave 1 placed at the wave 2 low will be the next target if 539 holds. And we'll see 1368 be reached. But what's important to understand, if this is a wave 1 and this is the wave 2, and this is a wave one and this is a wave two, then when Tesla replicates this entire rally, then that won't be the top. That will be the conservative wave three target. Tesla will have a shallow wave four correction and then go on a fifth wave higher. So I've got a lot of ambitions for Tesla, and I do believe they're going to be hit. I think the accurate count for Tesla, this is a wave one and this is a wave two. This is another wave one and another wave two. Even if this is a 3 or a 4, the projection in the short term is the same. This move gets replicated again. The only difference for a 1 and a 2 is that wave 3 in Elliott wave theory is stronger and faster than wave 1. So while this run is 10 months, it might not take Tesla 10 months to replicate it. It could happen in about 8 to 10 months that we see Tesla at around 1370. And then in this count, that wouldn't be the high. That'd be the conservative wave 3 target. We have a shallow wave 4 correction before a fifth wave higher. So Tesla going dramatically higher in 8 to 10 months lines up with NIO. Okay, NIO is another stock. 1, 2, 3, 4, 5, large degree wave 1. A, B, C correction, large degree wave 2. The length of wave 1 placed at the wave 2 low will take NIO to about 96, which many people think is crazy, but I think that's conservative. I believe, like Tesla, this entire run from about 320 to, early mid-January, about 8 months, 10 months will be replicated. And I believe towards the end of this year or very early into 2022, we will see NIO replicate this entire rally and reach 96. And it will go to the median of this pitchfork. Right now, the 61.8% retracement of 26 is the invalidation level for a wave 2. The low right here of 30 would be the stop. So if NIO is above 26 to 30, I expect it will go on a wave 3 impulse that will take it all the way to 96 aggressively by the end of the year. I think pretty conservatively early into 2022. Another set of Chinese electric vehicles that I really like are XPEV and Li Auto. Now I need to emphasize, I am an XPEV and Li Auto as a long-term shareholder. I want to hold these stocks for multiple years. Okay, this is the 1, 2, 3, 4, 5 large degree wave 1 and A, B, C correction, large degree wave 2. The length of wave 1 placed at the wave 2 low will take XPEV all the way to about 79. Now, I do think 79 gets reached in that same time horizon that NIO and Tesla are going, on their runs that takes NIO to 96 and Tesla to about 1300. But right now, I'm more interested in XPEV and Li Auto as long-term holds. Okay, I think in the long run, this whole chart is going to be a blip on the chart, and we're going to see XPEV explode past this high and confirm that this was all a huge basing pattern, and that retail traders were selling their golden ticket while large institutions were happily accumulating XPEV. So if XPEV holds above 22, and the invalidation level would be this low of 17. I know that's wide, but these are growth stocks, okay? Putting a 5% stop on a growth stock, a trader hypothetically will not wake up 2 years from now still holding it, okay? Remember, NVIDIA bulls, Bitcoin bulls have held through multiple 50% corrections, same with Roku bulls, to get to where they are now, holding massive winners without options expiration risk. And those are the ambitions I have for most of the stocks we're going to go over today. So 1, 2, 3, 4, 5, A, B, C. Large degree wave 1, large degree wave 2. XPEV will break above this high, and then this is the conservative wave 3 target. We'll see XPEV have a shallow wave 4 correction before going on a fifth wave higher. So I have a lot of ambitions for XPEV. In the very short term, let's see 22 hold. And if it does, I think XPEV goes dramatically higher with NIO, with Tesla, and with Li Auto. So this is Li Auto. I feel very similarly about it as I do, XPEV. I'm also holding Lordstown Motors still. I'm still holding all my growth stocks. I've entered all of those as long-term holdings. They will continue to be long-term holdings. So this is Li Auto. This is 1, 2, 3, 4, 5, large degree wave 1. An A, B, C correction puts in a large degree wave 2. I'm extremely bullish the electric vehicle sector. I believe this is a wave 1, and now we're putting in a wave 2 low. the length of wave 1 placed at the wave 2 low will take Li Auto all the way to 49. This likely will happen during the same time frame that NIO is going to 96 and Tesla is going to 932, and then eventually all the way to 1360, 1370. So that's Li Auto, 1, 2, 3, 4, 5. Clearly a large impulse. A, B, C correction puts in a wave 2 low. The length of wave 1 placed at the wave 2 low will take Li Auto to 49. I'm extremely bullish on the Chinese electric vehicle stocks, the American electric vehicle stocks. I believe these small cap electric vehicles, the best comparison I have right now are, the e-cash stocks like Square Cash and PayPal in 2016, 2017, and even the cryptocurrencies in 2018 to 2019. I think we might even be looking at, some big tech in the 2000s with some of these electric vehicle names. I'm extremely bullish, clean energy in the long term. This is Akimoto, 1, 2, 3, 4, 5, large degree wave 1, A, B, C correction, large degree wave 2, putting in a wave 2 low at the 78.6% retracement. This wave 2 low of about 5.63 is what bulls want to hold for now. If it does, the length of wave 1 placed at the wave 2 low will take Akimoto all the way to 43. I know that's a little wide of a stop, but these are growth stocks. In my unprofessional opinion, the best way to go about risk management for growth stocks are scaling in, smaller position sizes, diversification, and time horizon. And for me, my time horizon for these electric vehicles are very long. So this is Akimoto, 1, 2, 3, 4, 5, large degree wave 1, ABC correction, large degree wave 2 at the 78.6% retracement. The length of wave 1 placed at the wave 2 low will take Akimoto all the way to 43. Now this run is from 319 to about 208. So that's about a year. I think less than a year from now, 8 to 10 months, we see Akimoto around 43. More interested in Akimoto as a long-term hold. I think Nikola, Akimoto, QuantumScape, Workhorse, XPEV, Li Auto all break above these highs, all prove that this was all basing. And while retail traders were giving up their golden ticket, we'll talk about Wayfair in a second. Retail traders give up their golden ticket, institutions happily accumulate. In the long-term cycles, these are going to be blips on the longer-term chart, okay? This is Alibaba. I like Alibaba a lot. It's a large wave 1 and a wave 2, and then it goes on another 1, 2, 3, 4, 5, large degree wave 1 impulse, and an ABC correction puts in a wave 2 low at the 61.8% retracement of wave 1. So the length of wave 1 placed at the wave 2 low will take Alibaba conservatively to about 378. Now, I actually think that 378, the exact time target for that is that this is from 527 to about 1026. That's about a year and a half. I think a better time target is the length of this run from 323 to 1026. It lines up a lot with the Wayfair timeline, where 7 months from now, 8 months from now, Alibaba is all the way in the 350s. I think Alibaba and Wayfair, and really every stock that we're going to go over in this video, will better suit the person who hypothetically has a longer term outlook for these stocks. And here's why. When Alibaba eventually reaches the length of wave 1 placed at the wave 2 low, 378 is the conservative wave 3 target. It would have a shallow wave 4 correction before a fifth wave takes it even higher. So the invalidation for this wave 2 low is going to be the 78.6% retracement of 184. If Alibaba is above these levels, I believe institutions have been accumulating Alibaba at these discounted prices while it's been basing, wearing out retail, and now Alibaba is getting ready for a large move higher. I believe the length of this run from 323 to about 1020, almost exactly a 7-month run, will be replicated. Alibaba, 7 to 8 months from now, will be in the 350s. I still think the longer term picture is the best way to put it, because 350 in the bigger cycles will be very conservative. Here's Wayfair. I think Wayfair is almost just a good lesson of, what I'm looking for a lot of these electric vehicle stocks, a lot of these solar energy stocks, where this is a wave 1 and this is a wave 2. And notice how this wave 2, it had this big kick out wave. It let all these retail traders get off the bus. Okay. And I think this is exactly what Li Auto does. This is what, Nikola does. This is what Workhorse does. This is what, XPEV does. It's having these big kick out waves right now. QuantumScape, right? Get off the bus. And I think that's exactly what's happening right now in the electric vehicles, where they're getting out all the retail traders while institutions accumulate because they know what's coming next in the larger term cycle. So that's a large degree wave 1, a large degree wave 2. I think many electric vehicle stocks are, completing this large wave 2 right now. So Wayfair, I believe, is going to replicate this entire run, placed at this ABC corrective low. The bull flag traders will probably outperform the wave theorists here, but I believe the length of wave 1 placed at this wave 2 low will take Wayfair all the way to about 545. This run is from 318 to about 825. That's only 5 or 6 months. And I think 7-8 months from now, with Alibaba, Wayfair will go the length of this rally placed at this low, and it is going to reach 545. I think that the best way to look at Wayfair is also from a long-term perspective, because 545 will be a very conservative wave 3 target. We have a shallow wave 4 correction before a fifth wave, which is still the length of wave 1, at least, is replicated yet again. So Wayfair, the invalidation will be this low of 221. I think tighter stops would be 243 and 265. I don't think any of those lows will be broken. I think Wayfair has already broken above this wave 1 high and has given a lot of confirmation that it's ready to go higher. I think Wayfair is a lot of evidence that Chinese stocks, e-commerce stocks like Alibaba, even like Amazon, are ready for a large rally higher. The length of wave 1 placed at this wave 2 low will take Wayfair to about 546. That should happen in the next 6 to 8 months. I still expect that the person with the longer term time horizon will benefit the most from Wayfair. So this is Zoom. We're going to get into the software stocks now. Zoom looks really pretty. It's ready for a large move here, and I think it's going to be to the upside. This is a 1, 2, 3, 4, 5 large degree wave 1. An ABC correction puts in a large degree wave 2. I believe Zoom is going to go the length of this rally from the end of 2019 to around October of 2020. That's about 10 or 11 months. But remember, in Elliott wave theory, wave 3 is stronger and faster than the length of wave 1. I think 10 months from now, 8 months from now, Zoom will replicate this entire rally, and it's going to go all the way to about 796, as crazy as that sounds. And I think it's also going to do it faster than that even. I think Zoom is going to break above this high. It's going to confirm that this was all basing. It's going to be another stock that forms a huge cup and handle pattern. And while retail was getting bored of Zoom, institutions were happily accumulating it before it goes on another leg higher. So right now, the invalidation level would be the 61.8% retracement, which is 262. This low of 273 is pretty close. If those levels hold, the length of this rally will be replicated in time and price at least 2 more times, in my opinion. And we're going to see Zoom reach 796, and that's the conservative wave 3 target. It has a shallow wave 4 correction, and then it goes on a fifth wave higher. So another stock I like, pretty similar to Zoom, is Salesforce. So here's what I have for Salesforce. This is a wave 1 and a wave 2. It then goes on another wave 1, has an ABC correction, and puts in another wave 2. This is another example of probably the classical trading bull flags will outperform the wave theorists here. But I believe either way, even if you count this as a wave 3 or a wave 4, the length of this rally from 330 to about 97, right? This huge rally Salesforce goes on last summer will get replicated this summer. So the length of this move is from late March to about the very end of August. That's about 5 or 6 months. I think pretty conservatively, 6 months from now, 8 months from now would be very conservative, but even, shorter term, maybe 5 months from now, we see this entire move get replicated in time and price, and it takes Salesforce all the way to about 356. Right now, very clear level. I don't think 201 will be broken. Salesforce above 200, bulls use their imagination. I believe the length of wave 1 placed at the wave 2 low, ultimately 356 will be a very conservative target for Salesforce. And I do believe 356. I have a high likelihood that this will be hit this year. And I think most of the time targets for this, these stocks would be towards the end of this year or very early into 2021, we see these huge 2020 rallies have been replicated. Okay, so this is Salesforce, wave 1 and wave 2, another wave 1, another ABC correction, wave 2 low. The reason I like this as a wave 2 is because it passes the 50% retracement of wave 1, and that's actually very good for the bulls because that means when this whole rally is replicated, then 356 wouldn't be the top. It'd be the conservative wave 3 target. We have a shallow wave 4 correction and then go on a fifth leg higher. So I like Salesforce a lot. I like Zoom as well in this stay-at-home sector. I also like Fastly a lot. So I love Fastly here. This is a gorgeous wave count. It's a 1, 2, 3, 4, 5 large degree wave 1. An A, B, C correction puts in a large degree wave 2 between the 78.6 and the 61.8% retracement zone. So the 78.6% retracement is 37. I think we're ready to make that the stop. The length of wave 1 placed at the wave 2 low will take Fastly, as crazy as it sounds, to about 165. I believe this entire rally will be replicated and Fastly will reach 165. And as wild as this sounds, that's going to be the conservative wave 3 target. It has a shallow wave 4 correction before a fifth wave higher takes Fastly as high as 260. So this is definitely one where I think, the trader investor, hypothetically, who has the longer term approach will get the most benefit. But if you must know, this rally is from 316 to about 1019. So that's almost exactly 7 months. And what we're seeing in this entire software sector is that this 7-month rally gets replicated in 2021. I think 7 months from now, 8 months from now, we see Fastly, on its way to 165, have a shallow wave 4 correction before a fifth wave higher. But I really think Fastly is another one where the longer term approach will be the better approach. Because 165 is the conservative wave 3 target. We have a shallow wave 4 correction. We go on a fifth wave higher. So there's a lot of software stocks that look really good. I like Datadog too. Datadog's very similar to Fastly. Almost the exact same dates even. It's a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. A large degree wave 1 is formed. So this large degree wave 1 is from 316 to about 1016. That's exactly 7 months. That's also almost to the date, the exact dates that Fastly had. So birds of a feather definitely flock together, and I think they're getting ready to fly again. So this is a wave 1, an A, B, C correction puts in a wave 2 low at the 50% retracement of wave 1. The length of wave 1 placed at the wave 2 low will take Datadog all the way to about 159. I believe 6, 7, 8 months from now max. Datadog is on its way to about 159, and that is the conservative wave 3 target. We have a shallow wave 4 correction before a fifth wave, which is at least the length of wave 1, is replicated yet again. So I really like Datadog. I really like Fastly. They're almost identical counts for Datadog. I want to see this low of about 69 hold. If it does, the length of wave 1 placed at the wave 2 low is going to take Datadog all the way to 159. We have a shallow wave 4 correction before a fifth wave higher. And it's worth noting, by this count, wave 3 would actually be a lot further than 159. That would be the conservative wave 3 target. And I do believe that's going to end up being conservative. So this is Palanter. This is another stock people think is really sexy. I can see why. I think the chart's sexy too. This is a 1, 2, 3, 4, 5 large degree wave 1. An A, B, C correction puts in a large degree wave 2. The length of wave 1 placed at the wave 2 low will take Palanter all the way to 53. Now, this move is very short. It's from 10.6 to 127. So, I don't think having a 3 to 4 month target is the best way to play it. I think 6 months, 8 months, 10 months max towards the end of this year, we will see Palanter in the 50s. And right now, if we look at this, you connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, and that's how you get your Andrews pitchfork. Let's zoom in on this pitchfork because this is really interesting. Look at that pretty wick of this daily candle right here at exactly the median of the pitchfork. I think that's a lot of confirmation. This is the pitchfork. That is the wave 2 low. If Palanter is above 17 to about 16.40, I believe wave 2 is in. I believe the length of wave 1 placed at the wave 2 low will take Palanter to 53. I think Palanter sees 53 by the end of the year, but it's another one where the longer term approach will be the better one because 53 is the conservative wave 3 target. It has a shallow wave 4 correction before a fifth wave takes it even higher. So that's Palanter. Here is Cloudflare. I think Cloudflare is almost the best evidence that this software sector is going to go much higher. Very pretty chart right here. 1, 2, 3, 4, 5, large degree wave 1. This rally is very short from 9.8 to 260 to 212, 216. So 210 to 98, almost exactly, 5 or 6 months for Cloudflare that we are going to see this entire rally replicated. So we put in an ABC correction to put in a large degree wave 2 low at 60. So I posted about, Cloudflare around this range. It's gone on a 1, 2, 3, 4, 5 waves impulse, then completed another wave 2 correction. So I believe Cloudflare is nesting. It's a wave 1 and a wave 2. It's another wave 1 and another wave 2. This looks really good right here, and I believe the length of wave 1 placed at this wave 2 low will take Cloudflare all the way to 124. I think 124, pretty conservatively, is seen by the end of the year. I think it could even be seen by the end of the summer. So right now, Cloudflare bulls want to see 64 not get broken. I don't believe it will get broken. I believe Cloudflare is ready for the next leg up. I even think this is a lot of evidence that this entire software sector is ready for a large leg higher. Another good piece of evidence of that is Okta. So Okta looks really pretty. This is a wave 1 and a wave 2. Another 1, 2, 3, 4, 5 forms another wave 1. Another ABC correction puts in another wave 2. So just like Cloudflare, this is a large nest. A wave 1 and a wave 2. A wave 1 and a wave 2. I posted about Okta around here. I imagine that's risk-free. But anyway, I still stand by my September target that Okta reaches 308. I do believe it will reach 308. In September. I believe that this whole rally gets replicated in time and price, and I think 308 and even 322 will end up being very conservative wave 3 targets. I think Okta is another one where if we see this low of about 199 hold, then this whole rally will get replicated in time and price, and ultimately that's going to be the very conservative target. So once we get Okta to 308, 322, I'll update, but I think that's going to end up being very conservative. So I do expect Okta by the end of the summer reaches 308. For now, I want to see this low of about 199 not get broken. It's very worth noting 322 is the conservative wave 3 target. We'd have a shallow wave 4 correction before Okta goes on yet another leg higher. So there's a lot of opportunities in the software sector right now. I think Okta, Datadog, and Fastly, as well as Salesforce and even Zoom, are some of the big ones. So let's get into some fake meat. Here's Beyond Meat. Man, the last time we talked about Beyond Meat, I feel like it was $40 lower. But this is a wave 1, an ABC correction puts in a wave 2 low. It goes on another wave 1, another ABC correction puts in another wave 2 low. We talked about how Beyond Meat had very high short interest. It had 4 days to cover. So if you were shorting Beyond Meat, you can't cover your position for 4 days. Okay? That's very bad because Beyond Meat is up a bunch. Let me make sure I plug in my Mac real quick. This is one of my better takes. So, Beyond Meat, I think looks very good. This is a wave 1, an ABC correction puts in a wave 2 low. It goes on another wave 1, another ABC correction puts in another wave 2 low. The length of this wave 1 placed at this wave 2 low, I don't believe 99 gets broken, and I believe Beyond Meat is on its way to the 270s. So, this run is from that March low to the 125 high, and then this run from the March low to the 10-12 high is about 7 months. 6-7 months from now, I do believe this whole rally gets replicated. It's going to take Beyond Meat to 272. It's worth noting that that would be the very conservative wave 3 target. All these stocks are 1, 2, 1, 2, Elliott wave nest. There's not a wave 3 on this chart, and wave 3 is bigger and faster than the length of wave 1. I think we will see some fireworks from Beyond Meat, and I think the people who got in between the 61.8 and 78.6% retracement, they're going to be some pretty happy campers, because once we're above these highs, this is all a massive base. This was being accumulated while retail traders said it was overvalued. Okay, Beyond Meat's not overvalued, and I believe one day we're going to see Beyond Meat, in some ridiculous price target like 800. Okay, I really believe that, but for now, I believe the length of wave 1 places this wave 2 low will take Beyond Meat all the way to the 270s. I said in my last video, almost as a joke, I'm in the Beyond Meat cult. Okay, this is a cult stock. It's a cult short. It's not working out for those bears. I think it's going to work out a lot for the bulls. And ultimately, both of these wave 1 highs will get broken. And this was all accumulation from large institutions. I think the fake meat stocks are right up there with the electric vehicles and right up there with the software stocks and the solar stocks as some of the best growth opportunities that we will see, especially in the first half of this decade. So Here's another fake meat stock. There's not many of them. This is Tattooed Chef. This is a very pretty chart, probably one of the prettiest charts in this video, where it goes on a 1, 2, 3, 4, 5, large degree wave 1, an ABC correction puts in a large degree wave 2, and Tattooed Chef puts in that low at 14, and it doesn't break it. It goes on another wave 1, another ABC correction puts in another wave 2. Notice how for Tattooed Chef, you take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2, median acts as a magnet, has reactions on the lower bound, and then buying off the lower bound results in a good buying opportunity. Now, is Tattooed Chef the best entry here? I'm not sure, but it is moving with Beyond Meat. So I think Beyond Meat bulls also want to keep watch of Tattooed Chef. I believe the length of wave 1 places this wave 2 low. Conservatively, we're going to see Tattooed Chef reach 32. I think it reaches 32 by the end of the summer. I think that spells out a lot of very good stuff for Beyond Meat. You know, this is kind of my target zone for Tattooed Chef right here, that this is going to go to the median of the pitchfork, and ultimately 29 to 32 will be very conservative. So right now, let's see this low of 16 hold. I know that's wide. I don't know if Tattooed Chef is the best setup, but I think Beyond Meat bulls are really going to keep watch of this neighboring stock. Here's Polar Power. I love the solar energy stocks. Polar Power and First Solar are honestly two of my favorites. It goes on a 1, 2, 3, 4, 5, large degree wave 1, completes an A, B, C correction and puts in a large degree wave 2. Then it goes on another wave 1, an ABC correction puts in another wave 2. We never break below this low of 7.97. I believe Polar Power has put in this wave 2 low. The length of this wave 1 rally placed at the wave 2 low will take Polar Power all the way to about 37. The time target, I mean, this is a very short run from 904 to 122. That's about 4 months, 5 months max that we're going to see, in my opinion, Polar Power hold above 7, go all the way to 37. And I think 5 months from now, 6 months from now, Polar Power and a lot of these solar energy stocks are going to be dramatically higher. This is a 1, 2, 3, 4, 5, large degree wave 1, an ABC correction puts in a large degree wave 2, and then we go on a 1, ABC wave 2. We don't break below this low. I really like Polar Power, and I really like First Solar. Let me make sure I have the stock that we're going to do after Polar Power. I want to do 2 more, just add to this list. Crispr Therapeutics. Let's do First Solar right now. And then this is how I have First Solar on the larger term picture. A wave 1, an ABC correction puts in a large wave 2, another wave 1, another ABC correction puts in another wave 2 low. We've broken and closed above both these highs. So this is a huge nest for First Solar on the bigger picture. I believe it is going on a large degree wave 3 run that will end around the 50 to 61.8% retracement of this entire sell-off. This is kind of the next target zone, the next destination, in my opinion, for First Solar. It's going to go to 164. It's going to go to 200. In the shorter term picture, we'll see how it's going to get there. So this is, I think the 3-year chart is probably the cleaner view. I like this 1, 2, 1, 2. We don't break below the low of 59, and I believe the length of wave 1 places the wave 2 low. We're going to see First Solar in the 120s. I think we're going to see First Solar in the 120s. This is from 921 to 125, almost exactly 4 months. Towards the end of the summer, potentially even earlier, we will see First Solar at 121. That's going to be the very conservative wave 3 target. Wave 3 is stronger and faster than the length of wave 1. I believe in this instance, First Solar is going to blow past that, because this is a wave 1 and a wave 2. This is the wave 1 and a wave 2. Now remember, when I first talked about First Solar in March, I said that I was getting into leaps, and that for options, I always do an even number so that when the options are up 100%, I can take off half and remove the original risk of the trade. First Solar did that, so this trade is risk-free. The length of wave 1 placed at the wave 2 low. Sorry, it's a wave 1 and a wave 2, another wave 1 and another wave 2. First Solar is on its way to 121. I think it sees that towards the end of the summer, very conservatively towards the end of the year. But I really think towards the end of the year, that's when we're going to start looking at this 160 number, because that's just the wave 3 high, and that's the conservative wave 3 target. First Solar would have a shallow wave 4 correction, then go on a 5th wave higher, which is the length of wave 1, taking it to 160. I think First Solar is destined for 160. Next stop is 120. The next level is 59 that we want to stay above. So this is a 1, 2, 1, 2. And then when we zoom out on the bigger degree picture, it's an even larger 1, 2, 1, 2. So I think First Solar, this is another one where even the electric vehicle bulls have to look at and say, wow, this is a clean energy stock that not only has a very good short-term outlook, it also has a very good long-term outlook, and that's how I feel about really the entire clean energy sector. I really like the software sector, the clean energy stocks, the fake meat, and we'll talk about crypto miners this weekend, is my favorite, kind of growth holdings for the long term. I think that those specific sectors are going to be some of the best growth opportunities that we see in the first half of this decade. Let's talk about Crispr Therapeutics. Let's talk about Netflix. Then we'll wrap it up. So Crispr Therapeutics, I really haven't talked about this stock, but it's almost identical to the charts of a lot of the ARK holdings. It's almost identical to the ARK ETF itself. I believe Crispr goes on a 1, 2, 3, 4, 5 large degree wave 1, an ABC correction puts in a large degree wave 2 at exactly the 61.8% retracement. So when people say they don't believe in wave theory, it's like, you have to know that that's the 61.8% retracement of this rally. And I do believe we're going to get a large reversal here. I don't believe this low of 95 will be broken. I believe the length of wave 1 placed at the wave 2 low is going to take Crispr Therapeutics all the way to 282. This is a gene editing stock. I don't know many gene editing stocks. I'm new to this sector, but I saw this chart. It looks just like ARK, the ARK innovation ETF. And I believe this run from 316 to about 119. It's almost 10 months. And I think 10 months from now, as crazy as it sounds, if we see that low, that 94 low hold, Crispr Therapeutics goes to 282 less than a year from now. This gene editing giant is more than just, an individual stock. To me, this is a lot of evidence that the entire ARK ETF itself is going to go much higher. I think Crispr Therapeutics is just a microcosm of that. But the length of wave 1 placed at this ABC, wave 2 low. I mean, this is a pretty chart right here. If this low of 95 is not broken, the length of wave 1 placed at the wave 2 low takes Crispr Therapeutics to 282. And once again, that's the conservative wave 3 target. We have a shallow wave 4 before fifth wave higher. So this is why I think for almost every stock I've talked about in this video, the longer term approach will be the better one, because most of the targets that I've shared are the conservative wave 3 targets. In reality, wave 3 will most likely be much larger. It'll be followed by a shallow wave 4 correction before going on a fifth wave higher. Crispr Therapeutics is a microcosm of what I believe will happen for almost the entire side of that innovative Cathie Wood side of the market. This is Netflix. Netflix we talked about. I'm not sure Cathie Wood owns Netflix, but she should. Remember, Netflix went on a massive rally with Amazon after bull flagging around this time last year, right? So this is June of last year. Netflix is completing a bull flag that we posted about. And then it goes on that equal legs target higher. I believe it's the exact same thing. Netflix is forming a huge bull flag right around early June. So if this is a wave 1 and a wave 2, a wave 3 and a wave 4, we have a very nice level that we don't want to see Netflix go below of 458. The 38.2% retracement is 466. I do believe both of those levels will hold. So if wave 5 were the length of wave 1, then we'd be talking about Netflix at 620. Now, I don't believe that Netflix's target should be 620. I think that's way too conservative, but the time target would be 6 months. 6 months from now, Netflix at 620 to me is very conservative. I believe Netflix will actually be the length of wave 3 placed at the wave 4 low, and that's going to take Netflix all the way to about 743. I think that is hit in the next 6 months. 8 months, pretty conservatively, and the reason why is I believe this is the wave 4 low. It goes on another wave 1, an ABC correction puts in another wave 2, and we can already see wave 3 would be the 161.8% extension of wave 1, and that would be much higher than what we have right now is this conservative wave 5 target. So I'm very bullish on Netflix. I'm very bullish on Amazon, but I'm just going to show right now, if wave 3 of wave 5 was the 161.8% extension of wave 1, then it would go well past what we're calling right now the very conservative wave 5 target. And this is really why I don't believe Netflix is going to be the length of wave 1 placed at the wave 4 low. I believe Netflix is going to be the length of wave 3 placed at the wave 4 low. It's going to go all the way to 743. I think this is very good for the rest of the stay-at-home sector, and I think this is very good for the software sector, that this big streaming giant looks like it is ready to outperform in the rest of the next 5 to 6 months. So that's my spiel. I really like the streaming stocks. I really like the electric vehicles. I really like the solar energy stocks. I really like the fake meat stocks. And I think that we've been making fun of Cathie Wood all quarter, But we're about to see these names do extremely well. But there's nothing more dangerous than falling in love with these names. I understand Palanter is sexy. I understand that Cloudflare is sexy. I understand that the electric vehicles are sexy. But what's not sexy is not being diversified. So I really like these stocks. And with that, I'll leave it at that. We're going to see Cathie Wood make a resurgence this summer.